Hey everyone, welcome back to my channel. So glad you're here. So every month the MLS comes out with new data, the MLS and R, about recent solds, about how the market is doing. They tell you what the market did the previous month. So we're in September, so last week they came out with August's numbers. Number of solds, number of days on markets, basically what the market did last month. Those are all really great numbers. Everybody should pay attention to them. They should look at them. They should digest them, learn them, go through them. Especially us realtors, we all should, go through them and learn them and remember them. The problem with them is that they're old data. It's 4 weeks, 6 weeks old because they're all houses that have closed already and they've been under contract for. If they closed last month, they were under contract for 4 to 6 weeks even before that. So it's all old numbers, which is okay. You should still know what the market has done, and because it tells you where the market is going. But the data that I like to use is the data that's on the screen right now. Um, this data is information about stuff that is currently on the market right now. This is data about houses that are active on the market right now that are not under contract or not closed. So this is data about what the market is currently doing right now today. It is active as of this week. This refreshes every week. So it's active as of this past Friday, September 13th. So I want to go through it with you guys. And if you're a buyer and a seller, this will be very useful information for you. It'll tell you what the market is doing. It'll tell you if you're a buyer, whether you should jump into the market and start looking for a house now. It'll tell you if you're a seller, whether you should, possibly put your house in the market, whether we should have that conversation, or maybe you should wait. I don't know. I'm not in your situation. I'm not in your shoes. But either way, I would love to have a conversation with you, whether you're a buyer or seller, and see what's best for you. I just want to help you out and see what's best for you right now. So first, I want to start off right here in this little paragraph. So they just have this proprietary number. It's called the Market Action Index number. So they say that anything that is 30 or below is a buyer's market, and then 30 and above is a seller's market. So obviously we're at 60 right now, so we're still in a strong seller's market. Last week we were at a 61, so this number has been steadily going down over the last few weeks. So what does that mean? It means that we're still in a seller's market. We don't have enough inventory. Prices are still high. Sellers are still getting what they want for their houses. Buyers are paying at asking, if not over asking, for most houses. Buyers are even waiving inspections still, that kind of stuff. So we're still in a strong seller's market, but we are starting to see it cool down just a little bit. Every week it's getting a little more and more cool. Um, does that mean that you should sell your house now before it gets too cool? I don't know. That's not something I can answer for you. That's every individual's own situation. Should you jump in now before? Should you wait to buy? Is it going to cool down even more? I don't know. The Fed has their meeting right now, or this week sometime, about lowering interest rates. That's an interesting situation also, because the Fed is going to lower interest rates this week. The only question is how much. Are they going to lower by half a point or only a quarter point? So the market has already factored that in. Interest rates are already at their lows. So even if the Fed lowers the interest rate by a quarter point, which is what the market expects, interest rates won't really change that much. They're pretty much going to stay where they are right now, which is around that 6%, like 5.5%, 6% for most people, depending on your situation. But if they lower by 0.5%, the mortgage rates will change. But what will change is that it'll get national media attention. So the national media will catch on. They'll say, "Oh my God, the Federal Reserve lowered interest rates. Everybody should buy a house right now because interest rates are going down." Well, interest rates have already gone down, but the media hasn't been paying attention to it. So now we'll get an influx of buyers that'll be like, "Oh my God, I haven't been paying attention to this. So let's go buy a house now." So now we'll have a whole influx of buyers jumping in the market ready to buy, and that'll just drive prices up even more. But we'll see what happens because interest rates may still be too high for some buyers, for a lot of buyers. So I don't know. We're going to see what happens when the Federal Reserve actually holds a meeting and cuts the rates. So let's get into this chart over here. This chart is very interesting. So median list price, this is everything that's currently on the market right now. Not new to the market, but everything that's been on the market. So it takes the outlying prices, so the things that are really high price and then really low price, and cuts those prices out, and then it just averages out everything. And the median list price for everything that's on the market right now is $375,000. It's been pretty much holding steady at that for the last few weeks. It has not changed any. Median list price for new home prices is $329,900. That actually jumped up from last week. It was only $275,000. So this is everything that's new on the market. That's these 10, 14, 15 new listings right here. There were 15 new listings in this past week in Kenosha. So that's for these 15 new listings. The median list price was $329,900, so $330,000. The price per square foot, I know this number is very important to builders and rehabbers, is at $203. It's been about the same for the last couple weeks. It's been steadily going up though, as you can see. The average days on market is at 68. It's also been creeping up. As you can see, it's been on a steady incline over the last few weeks here. The median days on market, you want to pay more attention to the median days on market than the average days on market. The average days on market takes everything into effect. So everything that's been sitting on the market that's stale, that people just don't want to buy. So maybe it needs a ton of work. They're selling it as is. The sellers won't fix anything. It's like a complete gut job, a foreclosure, something like that. And it factors everything in. The median days on the market, it takes all those outliers out. So everything that's been on the market for 250 days or 160 days, it takes those outliers out. But the median days on the market is at 28. And that's closer in line to what the average days on market right now is for a new home, which is about 20-ish days. If you list your house right now, it's going to take about 15 to 20 days to sell it on average. Price decreases. We are seeing more homes have a price decrease. So what does that mean? So for a buyer, that's a good thing. It means that we're seeing sellers be like, we're not selling our house right away. There's a problem. We're listing our house and we're listing it too high, we're noticing. We're not getting the immediate offers. We're not seeing the flood of buyers who want to buy our house right away. So we have to lower our price. We're not seeing the 2020 and 2021 home prices. So we have to lower our price to encourage buyers to come buy our house. For sellers, it means you're not getting top dollar for your house anymore. It means that prices are coming back down to earth again. They're not the sky high prices that they once were. And that's okay. You're still getting a fair amount for your house. Houses are still worth record highs right now. You're just not getting overinflated prices that you once were. Price increases. This number, I think, is a fake number. This often happens by mistake. The realtor accidentally puts in a wrong amount and then has to unlist it, then relist it for the right amount. And they just, they put it in there for 150 and they should have put it in there for 200,000. Or sometimes our seller calls us and says, hey, I actually want to increase the price by 50,000. So then we have to unlist it and then relist it again for a higher amount. That doesn't happen very often, but apparently it has been happening a couple times throughout the past few weeks. So I think this is just a fake number. It's just been happening by mistake a few times here and there. So this, you can just throw this out. It just happens every now and then. Relisted is when a house expires, so it doesn't sell by the contract time. When you list a house, you sign a contract with your listing agent, and it's set for usually 3 months to 6 months. If your house doesn't sell by that time, you can always fire your listing agent at any time. But if it doesn't sell by the time that the contract ends, then you have the option to relist the house. You can either relist it with the same agent, or you can relist it with a different agent and try a different agent's marketing approach. Every agent has their own marketing approach. Some are better than others. Um, I have my own marketing approach. My broker has his own marketing approach. Everybody has their own marketing approach. Not everybody's marketing approach is different. I'm not going to say anyone is better than the other. Excuse me. But once your listing expires, you have the option to relist it. So obviously, we're seeing more and more houses be relisted. That's better for buyers because as houses are relisted, typically when you relist a house, you relist it at a lower price than you originally listed at because you want to try and get it sold. Not as good for sellers because you're relisting your house at a lower price. So you're realizing that you're not getting top dollar for it, so you're relisting it at a lower price. Inventory went down this past week to 67. Inventory is fluid. It fluctuates all the time. We'll see this rise and fall every week. That's okay. We are low on inventory. We know that already. This is going to go up and down all the time. They do track rental prices. You can see that rents have been going down in the Kenosha area for the past few weeks, which is great for people that have to rent or just want to rent because they don't think that buying is in their best interest. Everybody has their own personal preferences. I'm not going to say any personal preference is a good or a bad thing, but rent prices have been on a decline in the Kenosha area. We tend to see rent prices follow home prices. As home prices go down, rent prices tend to go down too. So that's that. Then they have this market action score here. As you can see, it's been on the decline / staying even in the 60-ish range here. Then if we go down here to some of these numbers here, I want to focus on this here. If you're going to buy in the Kenosha area, so I'm focusing on just Kenosha because if you buy in Kenosha, this report is pretty close to the rest of the county and Pleasant Prairie and Summers, and also Racine area too. So this report kind of encompasses everything. It's just not, the numbers aren't specific to every area. It's just Kenosha specific. But if you look at the numbers of Kenosha, so most of the buyers that I talk to, they're in this bottom range here. They're looking at that 200 to 250 price range. Actually a little bit lower, but this is where the numbers start. If you're looking in this price range, you can expect to find about a 1,200 square foot house. That lot size you can expect about a third of an acre to maybe half an acre. A 3-bed to 1-bath. Age of the house about 100 years old. There were 4 new listings this past week, and 7 of them sold, with an average days on market of 21. If you go up in the price range to, let's say, $300,000 to $400,000, house gets a little bit bigger, lot size gets a little bit bigger, a 3-bed bath still, with 1.5 baths. Age of the house is about 65 years old. There were 5 new listings this past week, with 5 of them sold, and again, 21 days on the market. If you go up in price a little bit bigger, to let's say 400 to 500,000, size of the house gets a little bit bigger to about 2,200 square feet. Obviously, your lot size gets bigger. Go up to about a 4-bedroom house to 2.5 beds or baths. I'm sorry. Usually these houses are new in the last decade, last century now, 24 years. We had 5 new listings this past week, with 7 of them sold, and 21 days on the market. Now, if you go up into what I consider luxury in the Kenosha area, I consider anything luxury at like $700,000 and up in the Kenosha area. So I would say this is listing at 824.5. So I would say 800,000 and up. You're getting over a 3,000 square foot house with 5 to 10 acres, 4-bed, 3+ baths. Age of the house at 46. I would say 30+ years. There was 1 new listing in this price range, with 1 of them sold, and the average days on market of 52. This also has different charts here. You can look at all the different charts. You can segment it by this chart here. And look at the differences in the price ranges. And you can so it's a fun interactive little thingy. If you guys would like to see this, you can search it by any zip code. I can email you the Kenosha specific one, or the zip codes that I subscribe to. I can email you a link to this webpage here. You can play around with it. You can search any zip code you'd like in the US. If you guys have any questions, please drop them in the comments. Shoot me a text, give me a call, shoot me an email. I'll answer them as soon as I can. I hope you guys found this informational. I'm not sure if I'm going to do a market video update every week or not. This updates every week, but that might be a little much for my channel. I might do one every other week, if not once a month. Again, I hope you guys enjoyed this. I will see you guys in the next video. Have a great day.